Good old Trump, he's doing the same thing that he always does. Anyways, he's done it again, this with the tariffs. Obviously, we know trade war fears erupt. Equities down across the board, particularly in Europe, because he really hasn't come up with anything yet out of that. Also, China, we know, still a little bit of negotiation there. But remember, that's been put on hold for 3 months. And Apple obviously imports quite a lot. And he's proposing import tariff. Anyway, let's see what happens. Obviously, Apple might decide to make more and manufacture more in the US, which is exactly what Trump's trying to do. As a result of that, US dollar also under a lot of pressure, basically getting pretty close to some very key support areas. 97.50 based the dollar index, and we'll talk a lot more about the US dollar into this week's report. Chinese industrial production came in also down. Look, last month was 7.7. We came in at 6.1. That's a big fall. Retail sales also the same, where we got at 5.1, much weaker than expected, and that's sort of a bit of a shame because we were thinking that those green shoots of recovery from China, were there, but they seem to be sort of being dashed quite significantly. But one thing we know about China is its resilience, and it's also got the ability to stimulate the economy, which you'll find you'll get more and more from China or from the PBOC in terms of trying to really stoke a bit more demand in that economy. Also because they've got to weather the concerns they had in the property sector, which is a little bit of an issue. Obviously in Australia last week we had a 25 basis point cut, so let's see what happens. I think it's more to do not with the fact that we're loosening monetary policy in order to stimulate growth. I think that's there. I think where the RBA is just saying, well, okay, we can afford to, and then that'll stimulate the economy. So I think the RBA is just reacting and saying, well, okay, we've done a good job here. The economy is doing what it's meant to be doing. We're happy with all inflation and where that is. So I think that's good. Okay, but let's have a talk about, the US dollar. And in my mind, we often look at the US dollar, and that's obviously the major currency. And the global currency, it's the standard. It's under pressure, and I think we've got to sort of look at that pressure and whether or not, because we've seen some good movements. That's also one reason why the Aussie's up, also one reason why gold's up as well. Of course, we're seeing a weaker US dollar across the board, and I think that it's quite interesting because when you do look at the tariffs, when you impose tariffs, the economic theory should actually say that the currency should firm. That the tariffs in themselves, sort of as a result, when it stimulates the demand locally, it should actually stimulate and support the currency. Now, traditionally, that's what should happen. But in the case of this, it's really not happening. And to me, that's obviously on the fact of what Trump wants. And I think when you look at Trump trying to weaken the currency to get export stimulating, which is a fair economic thought, but on the flip side, you've got the tariffs as well. It creates a little bit of a conundrum, in terms of where policy should go. Maybe policy means it just goes nowhere in terms of the US dollar, but it has been trending lower. The other thing is that I think, which is interesting with the Trump administration, is that they're giving good old Jerome Powell, the Fed chair, a bit of a concern because obviously where the US dollar should be trading is a matter for the Fed, not a matter for the government. And I think that we're seeing Trump trying to dissuade the Fed in terms of what they should do with their policy towards the US dollar. Now, the US has always had a strong dollar policy. It just makes sense because you're a strong nation, strong trading, and so it does make sense. There have been bouts of weakness, or where the Fed has actually sort of said, well, okay, we want it to be weak, but that was along 1985, I think, from memory. I was just out of school, so I think if anything there, that was then. At the moment now, we've got Trump saying that he wants the weaker US dollar. The interesting thing is, last time he was in power, his narrative was saying, well, okay, we've got to make sure that US dollar is weak. Yes, it makes sense, but when you've got so many things at play, it's sort of lots of policies going everywhere, which sort of grays it all out. And to me, that's always just a bit of an issue there. The interesting thing here also is that if you look at, the current treasurer, when you look at Stephen Mnuchin, when Trump was in power, he came out and said he wanted a weaker US dollar. This time, Treasury Secretary Besant has actually said that he prefers a strong dollar. Mind you, when being a manager hedging his own hedge fund. When you look at it, he said, "Oh, it wouldn't a weaker US dollar for the first term would actually be a positive thing." So he's out there saying, "I've got a positive US dollar spin," but underneath it, he's saying, "Well, it doesn't matter if it goes weaker. In fact, I prefer it weaker to start with." So I think that is quite interesting. I also think that one of the interesting take-homes I'm getting is that Trump's trying to persuade the Fed into what he's doing. I don't think that'll work. But certainly let's see how it goes. Powell still is in office until 26, I think March 26. So he's still there. So if anything, but on all of it, I do think that US dollar does look weak. In the port this week, we've sort of put the US dollar there and paid against gold because gold's only $150 off another record high, and you can see how those two commodities work, the currency against gold. And you can see that gold's been the output performer between the two. But needless to say, I think that US dollar does continue to weaken from here. So I guess if anything there are so many things saying the US dollar should go under pressure. It might be persistent fiscal concerns, the elevated US debt levels, just more concern from the current administration, Trumpy out there saying things. To say they want a strategically weaker dollar. So I think that's important because it does as a standalone policy actually increase the competitiveness of the US. And we do know what Trump's main game here. That's to get dollars in, get manufacturing in to help retard some of that debt, which is starting to look very, very frightening. Anyway, time will tell on that. Okay, I guess, this week it's going to be quite busy. I guess we're bracing ourselves for a pretty bit of turbulent time. The tariff threats are certainly out there, which we know. We've got FOMC minute meetings. We've got personal income and spending out of the States, PCE, durable goods orders, trade balance, second estimate quarter GDP. They're probably the main things which are out. And the GDP around the world as well. It's coming out first quarter GDP, which will be mildly watched.